This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Inflation data in both the US and UK keeps rate cuts in play. The widely anticipated July American inflation rate came in largely as expected, dipping slightly to 2.9% from 3% in June. That is its lowest level since March 2021. The core rate dipped to 3.2%. Rents, though, were up 5.1% in the year, but petrol was down 2.2%. Financial markets saw little to worry about in this data and seem to feel comfortable that it won't deter the Fed from the rate cuts in the rest of 2024 that they've priced in. More falls may be due in August. American petrol prices are now down more than 10% from a year ago in a respected national survey there. Meanwhile, US mortgage applications leapt more than 16% last week from the prior week, the biggest one-week rise since an outlier in early 2023, and before that, pre-pandemic. Triggering this was a sharp pullback in mortgage costs from the prior week as the rate on benchmark contracts fell nearly 30 basis points since the start of the month, now at 6.54%. And tracking the sharp decline in yields of long-dated Treasury notes and bonds due to the increasingly dovish expectations of the Fed. There seems little reason for the US Fed to delay the market rate cuts priced in by financial markets, although those markets do seem to be doing that for them. The Fed next meets in September 19, New Zealand time. I know we've pointed this out before, but there are still 2 weeks to go in the US summer holiday season, one that will end with their Labour Day on September the 3rd, New Zealand time. It is after that financial markets normalise. In the meantime, central bankers will be getting ready for their annual retreat at Jackson Hole, Wyoming, August 23 to 25, which has become a bit of an economic obsession. It is not only the holiday season in the US, it's also a national holiday in India today, their Independence Day. In China, their leaders are at their summer retreat in the seaside resort enclave at Badahe. But in Japan, Prime Minister Fumio Kishida has resigned after nearly 3 years in the role. In Europe, there was CPI inflation data out for England. That remained low at 2.2% in July, but up from 2% in both May and June. They got higher rents, up 8.6%, and their core inflation is running at 3.3%, kept down by lower petrol costs. And we should also note that both steel rebar and soybean prices are still moving sharply lower, both in response to tough conditions in China. They are not the only falls, but they are the commodities leading the retreat. And locally, the CBA profit result release heralds the start of the local earnings season reporting, one that is sure to colour where both the ASX and NZX goes from here. The US Treasury 10-year yield is now at 3.83% and down 3 basis points from yesterday. The price of gold will start today down $24 from yesterday at $2,441 an ounce. And oil prices are $1.50 softer at just over $76 a barrel in the US, while the international Brent price is now just on $79.50 a barrel. And the Kiwi dollar starts today down 0.75 cents from this time yesterday to be just on 60 US cents following the OCR cut. But to be fair, it is only back to where it was last week. Against the Aussie, we're down 70 basis points from yesterday at 90.9 Australian cents. Against the euro, we're down 80 basis points at 54.5 euro cents. That all means our trade-weighted index starts today at 68.5 and down 70 basis points. And the Bitcoin price starts today at $59,138 and down 3.7% from yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.